Hi, today's Wednesday. It's the 22nd of April. My name's Adam Hebener. I'm the CEO of Modern Mortgage, and this is today's Modern Minute. And guys, a lot to share with you today because we've just had a lot happening in this kind of saga we've been helping you understand in giving you some insight into kind of the liquidity process of the mortgage industry. And if you've been following what we've been sharing with you, you know that we've talked a lot about the FHFA. That's the government office that stands over Fannie Mae and Freddie Mac. And they're kind of the ones who are responsible for helping us solve a big problem that occurred as a result of the CARES Act. Now, just as a reminder, the CARES Act is that act of Congress, the first $2.3 trillion that was given to the American public to kind of help stimulate what's going on. And one of the big provisions of that act is that it included the opportunity for forbearance. And you all will remember that forbearance means patience. It means it gives the borrower or the person who lives at the house the right to kind of wait and make the mortgage payments at some point in the future. Now, that's a good thing, and we're supportive of it. We're glad for that. As long as those who only really need it use it, it can be a great thing. There are some downsides to forbearance, so we want to make sure anybody who doesn't really need it isn't using it. But that's for another Modern Minute. The good news is that forbearance is working. The bad news is, and you guys know my big frustration with this process, is that even though the person who makes the payment, the borrower, even though they don't have to make their payment today, the secondary bank still has to make that payment by law. So you've got millions of households not making payments, and those banks are still responsible for making the payments for those millions of households. So very reasonably, our industry has been asking FHFA, the Treasury Department, Mnuchin, Mark Calabria, and others to provide a credit facility to protect those secondary investors in the meantime. Now, a credit facility is just like a credit card. So what we've said is, look, let that industry put it on their credit card while they're making payments in the meantime. That'll make sure downstream bondholders still get their payments. Forbearance still occurs, but it doesn't hollow out the mortgage industry in the meantime. And I have to tell you guys, I think that's a pretty reasonable request because this is not happening as a result of bad business by those banks. It's literally just happening because the congressional act just didn't think through the process well enough. And that's probably not that surprising. They had to do a lot in a short period of time. So the fact that the whole thing wasn't thought through, not that surprising. But the fact that no solution has been given in the meantime is quite surprising and is a big deal. So this is what I want to share with you. This has improved slightly. It's kind of moved in the right direction. It isn't great news, but it's kind of okay, not horrible news that as of now, FHFA has allowed a credit facility to be provided to the secondary markets. Now, there's a couple of caveats, couple of catches. Number one, the first catch is that none of that facility can be used. It doesn't really kick in for the first 4 months. So what that means is borrowers can miss payments for month 1, month 2, month 3. That's when the servicer can come back to FHFA, who is being facilitated by the Fed, by the way, in order to access the funds to help pay for their servicing burden. Now, that's good news. We're glad for that. But there's a big problem in between. And that problem is forbearances are skyrocketing. So in a normal portfolio, forbearances are at about 0.25%. Very, very low. But in the current market, they're at almost 6% and climbing, and very, very quickly. And so if that continues to happen at that rate, how long is it going to take? Another maybe 3 weeks, 4 weeks before we're at 12%, 15%? There's no way to know how big that will get. Let me translate that a little bit with an analogy. Let's say you had a rich uncle come in and say, hey, good news. We're going to make all your payments for you. You're not going to have to worry about making your payments anymore starting in 4 months. That'd be good news. You'd be excited. You'd say, hey, that's great. But what if your uncle then came along and said, by the way, the amount of your bills over the next 4 months could be infinite? Well, then that good news coming 4 months from now may not be enough to help me get to those 4 months. So what we're very concerned about is the facility does not go far enough to care for that secondary market, and there's still significant risk in that marketplace. This could still, if forbearances climb, be just too big a burden for those banks to make. how many mortgage payments should they reasonably be able to make on a monthly basis? 1 million, 2 million, 10 million? How many mortgage payments should they have to make? Obviously, the numbers can get pretty staggering pretty quick. So we're still calling for more to be done. We're glad this is pointing in the right direction. But in the meantime, it's kind of just okay, if I could give you that as a description of what's happening. I want you to have this because when it hits the headlines, as always, we want you to be able to interpret what's going on. Now, on that topic, the topic of headlines, just one last quick note, and that is, the history of the United States is a remarkable history of remarkable people rising to remarkable challenges. I think what's important about that is we've got to remember that we are the United States before we break back down into the identities of left or right or race or socioeconomic status. Before we're any of that stuff, we're Americans. And it's so important now more than ever that at least our small community step back from being so easily lured in by your own talking heads. I'm getting so much information. All the guys on the right are calling me, telling me, the guys on the left started this and are making it worse. And all the folks on the left are calling saying, the guys on the right started this and are making this worse. Let me just tell you, if you're a person who's responding in the comments of everything, if you're watching the news and getting mad all of the time, I got to tell you, you're not getting great information. The information, I've never seen a bigger gap in my entire life between actual economic information and the headlines. And so we're going to be going into that more and more over the next couple of days. But let me just tell you, you've got to prepare yourself to step back from being sucked into partisanship right now or identity politics or being I'm a whatever, I'm on the left, I'm on the right. I got news for you. If you're teaming up right now, your teams are going to lose. It's the only folks who are going to make it through this process are the ones who have resiliency in their ideas, resiliency in their ability to evaluate the marketplace, the socioeconomic and political climate, and really just be able to find out not what you think is coinciding with the jersey you wear, but instead, what is true. And so let's together continue to build a framework for understanding what is true, what is authoritative, so that we can take actions that benefit us instead of figuring out who's right and who's wrong from a political standpoint. It's not going to serve us. So I hope I can continue to call you to that. Please respond back. Like, share, subscribe. Talk to us about that. If you think I'm an idiot, I want to hear it. If you want to make fun of me, I hear a lot of that. I'm glad for that. Agree, disagree, get involved in what we're doing because we want our community to opt out. And I hope that helps. Looking forward to seeing you guys soon. It won't be long now. Take good care. Bye-bye.